September. Sandip Agarwal is with us, fund manager at Sowilo Investment Managers. Sandip, good to have you back on the program. How do you think about this at a top-down level before we get into stock implications, etc.?
So, good morning and thanks for having me on the show. So, I believe that, the sector is generating huge amount of cash, and right now there is not enough opportunity for anyone to, deploy that kind of cash. So, it is best to, not hold it back and return to shareholders, because the acquisition which are available also, they are very, very pricey right now, and it doesn't make much sense to do any large acquisition or anything. So, I think these are cash generating machines. They keep on generating cash every quarter, every year. So even if some opportunity arises, these companies can very well use that accrual, or even they can borrow for temporarily. So I think there is no other option but to return the cash, and I think they are doing the prudent thing in that sense. And I think all of them will have to do that because the generation is very, very significant.
Sandip, hi, good to have you on the show. So, but the thing is that, yes, in the interim, obviously, who doesn't like cash, right? As a shareholder, if you're not getting too many stock returns, the least you can get is either a dividend or a buyback in Infosys' case. But, and we've had this discussion. You have very clearly laid out the reasons why you are negative on a lot of the large IT services companies. But when does that start to change? Surely there has to be a better way of utilizing all the money that they're generating at a time when they're barely growing 2-3%.
So I think what will happen...
Whether it's talent, you said acquisitions are expensive. It could be getting top dollar talent. It could be incubating at some absolutely new ideas. Surely there has to be a better way to use cash when you are simply fighting for growth.
So, the deployment of cash is very, very gradual. Even if you want to build capability, I'm sure they all are trying to do that, and they have always done that in the past. Also, they have caught up with new technology. But the deployment of cash is also very gradual. If you see even Reliance Intelligence, how much amount they are saying, 855 crores, right? So it is not a big amount. These companies are generating tons and tons of cash. So even if they want to invest in talent or anything, I don't think it will cost so much. And secondly, I don't think these companies will suddenly like to change their business model from services to any product or building some LLMs and all that. I think they will try to fit themselves where they can add significant value to the end client, because they also don't want to, get into a direct competition with those big techs which are big provider of their revenues. And, they both can coexist and do much better. So the only reason I am negative on the sector is that on the large cap, because the PEG ratios are very high, and I think for at least 1.5 years, the amount of effort which will fall, that can't be compensated with the realization improvement. So I think after 1.5 years, there could be a reset, and we will have a relook at that time.
The last, I think, 4 times that Infosys has done a buyback, it's been through the open market route. So we don't know. We'll see what the board decides this time around, the quantum and the route, etc. But generally, in best case scenario, that does what? It just puts at least a floor on the stock, because the stock is now barely some 8-9% off the 52-week low. It's fallen 25% this year. So, what's the best case scenario ahead for Infosys shareholders?
So obviously, there are a lot of funds in the world which buy the stock with high dividend yields, and their mandate is to do that. So I think for those funds, it makes a lot of sense to have this stock. And as I said, Surbhi, this sector, large caps are like, mid-single digit kind of growth story. So if this year growth doesn't come, we have seen low growth last year. So, there will be 1 year, maybe next or next to next, when you will see again 15% growth also. And in that year, you can make 30-40% return. Plus, if you are getting 3-4% dividend yield in form of direct dividends and buyback, I think it makes sense for a lot of people whose expectations are 8-10%. There are many funds in the world who are happy to invest at 8-10% also. So I think from that perspective, plus they give a lot of cushion, and it is also a hedge against falling rupee and so many other things. So it makes a lot of sense. And also, as I said earlier, also many people would like to replace IT with FMCG because growth rates are more or less similar, and cash generation and everything are similar. So why not to buy something at half the multiple of something else? So I think those things play out in the favor of this sector.
No, absolutely, and take your point completely. For all of those reasons that you've mentioned, perhaps large cap IT still has. So it's not a very offensive play. It's a defensive play in the portfolio, but perhaps it still has a place.
Well, indeed, and we had Sandip yesterday, on Finding Alpha, and he was telling us about, how we are cribbing that the Magnificent Seven is not yet here in India. He said, give it time. All these Microsofts and the likes, they as well started small. As a percentage of the US GDP, it was very, very small. As the GDP scaled up, these companies as well, today they contribute 10 to around 12% of the GDP, that is the market cap of those max 7 companies as a percentage of the US GDP. And he sees it's, in all probability, India can do the same as well with the larger names. But Sandip, you briefly mentioned about Reliance Intelligence as well. You believe there's big potential, 850 crores. Just run us through that bit. Why are you so positive?
No, so, they are doing the right thing because there is a competition which has come in form of Perplexity and OpenAI. So, the obvious, and Reliance has a huge telecom base, a huge customer base. So, they are trying to buy this hardware and they are going to invest around 855 crore in Jamnagar, and they have tied up with Meta, which is working on the Llama LLM. And, in turn, Meta has hired the best talent in the world. You just see the kind of people they have hired in last few months, right from 100 million base salary to 1.4 billion. So tremendous amount of work is happening, and now combine that with Reliance own acquisition in 2019 of Haptic, where it will be easier for them to distribute this product. So I think Reliance Intelligence is very beautifully building the whole ecosystem where they can give a tough fight to the competition which is coming in. See, now this is not a recommendation of Reliance or anything. I run a PMS, so I'm just giving how they are thinking and how they are trying to build the ecosystem. And Nigel, I would say that, when Microsoft got listed, US GDP was 4.6 trillion and Microsoft was just 750 million. So I think we will do phenomenally from here. As GDP goes up, you will see a lot of techs coming in and, replacing a lot of big techs, which we are taking services today in India. I am very, very confident we will definitely achieve that.
Hopefully, absolutely. Sandip, so since we have you, why don't you just, some of the stocks that you mentioned yesterday in terms of high conviction ideas, why don't you just recap those for our viewers, Sandip?
No, so I have not recommended anything, but I would say this, that, we love the platform space because, the people, the nuclear family concept, the falling population growth rate and the lower fertility rate, all these augurs very well for the, the delivery platforms because people want solutions. It all works very well for, the small solver, like the carpet providers of carpenter, plumber and all. So those business models, it augurs very well for the tourism industry because, the way tourism is growing and, you will need lot of platforms which can provide you comfortable and safe stay. So a lot of platforms will evolve like Airbnb. I'm sure that, there'll be a very big competitor to Airbnb, which is homegrown Indian competitor. Very, very soon you will see that. So we love all these themes. There's so many themes to play. There is a, luxury car rental theme. And so we are very confident that, platforms are going to solve more and more human problem, and the way life goes busy, even in the medical side, we will see a lot of diagnostic things coming up because, no one wants to do the ancillary work. For example, 10-15 years back, restaurants were delivering food to the doorsteps of customer because they did not have a choice. There was no one who can do that. So they were focusing on two businesses. As soon as Swiggy, Zomato came, today if you ask a restaurant below your apartment, he will say, please do Swiggy or Zomato. I have experienced it every day. So, no one wants to do the ancillary work. So tomorrow, diagnostic, today they are collecting blood samples. Who knows, tomorrow something else can come which can do for them. So a lot of scope for platforms. They take time to money, but then it is great business.
Absolutely. Directionally, talking about irreversible change, perhaps a lot of the, the companies that play in this space. Thank you very much for the conversation this morning. You have a good day and we'll look forward to connecting again. Thanks very much, Sandip. We'll take a break on that note.